I knew I wanted to be rich when I was a kid. Not because I was some greedy, money-hungry child, but because I just wanted to buy my dad's time back. My parents are immigrants from a state in India called Punjab. And the way it works is when your parents come from a different country, a poorer country, and then to come to a place like America, now not only do you have to work to feed your own family here in a new country where you don't speak the language, you don't know the culture, you don't know the people, you don't even know how the system works, but you also have to work to send money back home to the poorer country to feed your siblings and your family out there. So now my dad is working 6, if not 7 days a week, long days, morning to night, so I don't get to spend time with him. And at the same time, I wasn't allowed to say I wanted to be rich, because if I said I wanted to get money, well, that was almost like a sin in my house, because the way I was raised, talking about money is taboo. Money is bad, money is evil. You shouldn't worry about money or talk about money. Yet at the same time, I'm seeing my parents work pretty much every single day. Like if my dad got a Saturday and a Sunday off, that was considered a long weekend. So I'm not allowed to talk about money. I shouldn't worry about money. I shouldn't think about money. I shouldn't be stressing about money. Yet here, at the same time, I am seeing my parents work their butt off to get a paycheck. It didn't make sense to me. And as I started to get a little bit older, I started to learn a little bit more about money. I started to learn a little bit more about success. I started to realize that there are some big money lies that most of us are taught. Number one is that it takes money to make money. That is not true. It does not take money to make money. It takes money to grow your money. But if you want to make money, you need hustle, you need drive, you need the work ethic, because you can make money without money. But if you want to grow your wealth, then you need money. And the second thing is, if you want to get rich, you need a big salary. See, the second thing that happens when your parents come from a country like India is they want their kids to become successful. Now, my parents, like a lot of immigrants from Asia, didn't grow up with financial education. And so when you come from India and you want your kids to become successful, what does that mean? That means they got to become a doctor. And so I was the same thing, where I was told I need to go out and become successful. Fine, I agreed with you there. I wanted to become successful. But the path to success was where my parents and I differed, because I was always told that if I wanted to become successful, I got to be at the top of the food chain. Fine, I agreed with you there. And if you look at any of the career pamphlets that you get when you go to school, what does it say? The top earners are doctors, maybe attorneys, maybe accountants, maybe engineers, but that's it. These are your top income earners. So if you want to be at the top of the food chain, the top of the top, what do you got to do? Go out and become a physician. This is why you see so many brown kids go out and become doctors, because their parents beat it in them, literally beat it in them, since the day they can start to speak. And so now you have kids that are working to go out and become successful, aka become a doctor. But there's a difference, and this is one of those things that was very painful for me to learn. There's a difference between going out and becoming a high income earner, like a doctor, an accountant, an engineer, and becoming financially rich. They are two completely separate things, because you can earn a high income and still be broke. Your income doesn't guarantee any sort of financial wealth, period. And this is one of those things that when I learned this, I was so upset, because by this time I was halfway through my college career. I was studying to go and take the medical college admission test, the test that you take to get into medical school. And that was when I first started learning about money. And I realized it's not how much money you make that matters. It's what you do with the money you make. Now, don't get me wrong. Having a bigger income can help you become faster, sooner. But even if you make a big 6-figure salary, if you don't know what to do with that money, it doesn't mean anything in terms of your wealth. A big salary might let you buy nicer things, a faster car, or a bigger home, and nicer vacations today, but that doesn't mean anything for your future wealth. Because guess what? A fast car is not going to give you any cash flow. A big home is not going to pay for your kids' college. And you might be thinking, but you can sell the home for a profit. Your home is one of the worst kinds of investments that you can make. And that's why when you hear about wealthy people becoming wealthy, no wealthy person talks about, oh, I became wealthy because I bought my home and then I sold it for a big profit. No, wealthy people become wealthy because they built a multi-million-dollar business. Wealthy people become wealthy because they built a real estate portfolio. Wealthy people became wealthy because they bought stocks that appreciated over time. And this is where now, if you want to become wealthy, you have to reshift and reframe your mind and stop following what everybody else does. Because if you keep doing and following that conventional wisdom of trying to become successful, you're going to end up like everybody else. And guess what? The majority of people in America are broke. That is the way that our system works. Now, this is where you have to, if you want to become successful, be willing to think a little bit different and then do something a little bit different. And it starts with the way you think. Because, well, that's why I call myself and this brand the minority mindset, because all success starts with their mindset. And if you're not willing to do something different, you're never going to achieve anything different. And the reality is, the reason why the majority of people are broke is because we follow the system where you work to make an income. And maybe if you do it the right way, you're going to work to get a big income. You go out and you get a high-paying job. Now, again, there's nothing wrong with being a doctor. There's nothing wrong with being an attorney, nothing wrong with being an accountant, nothing wrong with being an engineer. We need these professions. In fact, we need good people in these professions. We need more good people in these professions. But what we need less of is people going out to become a doctor just because you get a big salary because you want to get rich. And this is where if people understood money, well, now doctors could be a lot more financially free, because now when you make a big salary, you know what to do with the salary. That way you can actually be wealthy. You know how you can use a tax system to your advantage as a doctor, because now what every doctor will tell you is when you start making that $300,000, $400,000, $500,000 a year, the government's going to take a big chunk of that. They might be taking half of that money. So yeah, you work to earn $500,000, but $200,000 is going straight to the IRS. That's a lot of money going in taxes. And then you got to figure out, how do you live the doctor lifestyle while also putting money away to build wealth? And when you talk about putting money away to build wealth, where does the money go? And this is where now you have to understand the difference between just working to earn a salary and working to build your wealth. Because guess what? If you want to become wealthy, you don't need to make $500,000 a year to do that. But you do have to have the right financial education. This is why I keep saying it's not how much money you make that matters, it's what you do with the money you make. Because even small investments, if you start investing $100 a month, the day you turn 21, and you keep investing that $100 month after month after month from the age of 21 until 66, you just throw that money into the S&P 500 and you got a historical 7 to 10% return on your money. Guess what? You're going to retire a millionaire on your $100 a month investment. Now, if you don't know what that means, don't worry. I'll explain what that means in just a little bit. But this is where even small investments made consistently over a long enough period of time can make you rich. And this is where many people say, but Jaspreet, I don't want to wait until I'm 65, 66, or 70 years old to start enjoying my money. How can I have more money today? That's fine. You don't have to wait until you're 70. But that means you're going to have to invest more money today. How can you invest more money today? Well, you can do two things. One, you can live smaller. You can live in a smaller home, drive a smaller car, go on less vacations, spend less money. That way you have more money to go out and invest today. And you can also work to earn more money. There's a limit to how much you can cut back on. If you make $50,000 a year, yeah, maybe you could put aside 10 grand a year. You live off of 40, you invest $10,000. And then you get into this whole financial education thing and you're like, you know what? I want to do more of this. I want to invest more money. That way I can build more wealth and have more wealth sooner. Now maybe you work to put aside $15,000 and you live off of $35,000. Maybe you work to put aside $20,000 and you live off of $30,000. But there's going to be a limit to how much you can cut back on. But there's no limit to how much you can earn. Because now if you can go from $50,000 to $500,000 a year, now you can invest 10 times more money and also live a 10 times bigger lifestyle. And this is where now it's reframing the way you think, because most of the time when people hear that, they think, what? How in the world am I going to go from $50,000 to $500,000 a year? That's not even practical, Jaspreet. And you're right. Maybe it's not going to happen this year. Maybe it won't happen next year. Maybe it won't happen the year after that. And maybe it won't even happen the year after that. But if you think you can, and you start working towards that, guess what? Maybe you go from $50,000 to $250,000. Yeah, maybe you didn't hit that goal, but at least now you're making 5 times more than what you were before. And how do you start doing that? That's the next question, right? Well, you got to start learning about money. You got to start learning about how you can earn more money. And you got to then put in the work. You got to be willing to take risks, and you got to be willing to try things. Now, YouTube has made this so much more accessible. Thank God for YouTube, because 20 years ago, even 10 years ago, this was more difficult to learn about this. Because 10 years ago, You would have to go out, and you didn't really have Audible back then, but you'd have to go out and get audio CDs. That's what I used to do because I didn't like reading books. So I used to go on to Amazon or go to Borders or Barnes & Noble Borders back when it was in business, go out and find the actual audio CD of books that I wanted to read, pop them in my car, and listen to them when I'm driving. Now you got YouTube, you got podcasts, you have blogs, so much content on the internet. And now the question is, what are you doing with the time that you have? Are you spending your free time watching Netflix? Are you spending your free time going out and playing video games? Or are you spending your free time learning about how you can actually earn more money and invest your money? This is why I say that the best ROI that you can get right now is by canceling your Netflix subscription. Not because you're going to save $15 a month, but because you're going to save 2 hours of your time every single day. And then if you reallocate those 2 hours of time every single day towards not watching whatever's on Netflix and learning and building your financial education, learning about how to start a business, learning about how to increase your income, working to get a certificate, working to learn how to invest in real estate, working to learn how to analyze stocks, working to learn how to invest in startups, working to learn how to buy businesses, in 5 years, you're going to be in a completely different situation because of the 2 hours that you're spending. And you might be thinking, but Jaspreet, I work so hard. I need a break. I need a time off. Look, if you're working all during the day and you have some free time in the evening, you got to figure out what's more important for you right now. Is it sitting there in front of the TV and just letting yourself relax? Or is it sitting there and learning something and building upon the education? That way you don't have to kill yourself at the job that you hate right now. And if you hate the job that you're at, and this is where now you got to start thinking practically, what are your options? Can you get a different career? Can you get a different job? Can you do something that's going to pay you more money? Or if not, what can you do right now to get out of that situation that you're in? And this is really just looking at the facts of your life today and making a decision based off of where you are today. Because if you tell me, Jaspreet, I can't get out of this job, I can't do something else, but you got 3 hours at home in the evenings that you can do something else, this is the time where you need to be learning. And I call really that period of trying to build something the decade of sacrifice, because everybody on the internet, I'm going to be very honest with you right now, everybody on the internet is pitching this 6 months to wealth, 9 months to wealth, 12 months to wealth, where if you just follow this 5-step system, you do these 5 things, you put your money into this thing, you take this class, you do this one thing, in 12 months, you're going to transform your life. The only way you can transform your life is if you change your life. That means it's a lifestyle change. And just like anybody who wants to get in shape, if you've ever seen anybody who goes from obese to in shape, it's not something that you do for 60 days. Why is it that any time you see somebody who goes from fat to skinny very quickly, 9 months later, they're fat again? Why? Because it's not a lifestyle change. If you really want to stay in shape and you want to stay skinny, you want to stay fit, what do? It's not that you cut calories and cut your carbs and you cut your sugar for 6 months. It's you do it for a lifetime. You make a lifestyle change instead of doing a 60-day diet or a 90-day diet or a 6-month diet. You make a lifestyle change where you say, you know what? Yeah, maybe I'll have some sugar here and there, but I'm going to commit to living a healthier lifestyle. I'm going to commit to going out on walks. I'm going to commit to going to the gym. I'm going to commit to eating healthier. It's a completely different game than, you know what, I'm going to do this for 60 days. I'm going to lose my weight. I'm going to go to Cabo. I'm going to go to Cancun, and then I'm going to put all the weight back on. It's the same thing with your money. If you really want to build financial freedom and build wealth, it's not going to happen in 12 months, but it can happen in your lifestyle, and it can happen in your lifetime. But you're going to have to change your lifestyle. And that means your lifestyle is going to go from me spending all my money today to now not spending all my money today. Me having all the nice cars to me sacrificing the nice cars right now so I have more money to invest. And then me spending my free time watching Netflix and Hulu and HBO Plus and whatever else is on TV to now me spending my free time learning about financial education. Me spending my free time learning about making more money. Me spending my free time learning about business. Me spending my free time to learn about how our economic system works. Me spending my free time to learn about what's happening in our economic system right now. Me spending my free time to learn what is money, how does money work. And this is not going to happen overnight, because the first thing that happens is you got to start learning. What is money? How do you manage your money? How do you build systems with your money? How do you invest your money? What is investing? What's the stock market? What's real estate investing? What is a business? How do businesses make money? How do you grow a business? What is digital marketing? How do you get customers? How do you scale a business? What is a scalable business? How do you sell a business? What is selling a business? These are the questions that you will go through over time, and you can't learn everything at once. And school is not going to teach you this either, because 99% of the time, and I say 99% because there's always some exceptions. Very few, but some exceptions. If your professor knew this, many of them would not be teaching anymore. And again, there are some great teachers. There are some great professors. And many of them are very good at what they do. But most of them are not rich. And this is where now you have to go out of your way to learn about money. Our education system teaches people to be employees, period. Again, not a bad thing. Not everybody is going to be an entrepreneur. Not everybody should be an entrepreneur. I'm going to jump back into the video in just 1 second, but before we do, if you are an investor and you're looking for an easy and free way to stay up to date on what's happening in the top financial news, from the economy to the housing market to the stock market to the crypto market to the global economy, then you have to check out Market Briefs. Market Briefs is my free financial newsletter that I created that will keep you up to date on what's happening in the financial news. You can read the newsletter in less than 5 minutes every morning. It's a fun and easy to read email, and it's completely free. So if you haven't joined Market Briefs yet, I got the link to how you can join down in the description below. I'll tell you a little story. It was kind of funny because when I first started learning about entrepreneurship and I first started seeing success in entrepreneurship, this is years ago now, I was so obsessed and I was so excited because I finally, for the first time, started making decent money. And if you want to quantify decent money, it was probably $200,000 or $300,000 a year as an entrepreneur from my own entrepreneurial hustles. When I first started doing that, I was so excited because I felt like I finally proved the system wrong. Now, to give you a little bit of backstory, if you don't know, I did not go out and become a doctor, but my parents were not happy that I was not going to become a doctor. It created a lot of tension, a lot of controversy. So my parents and I kind of compromised, and I went to law school instead. But when I was in law school, I knew I wasn't going to be an attorney, so I worked on just my own stuff. And that was when I first started to really see my success as an entrepreneur while I was going to school, because I went to law school part-time, working on my businesses full-time, and I worked on a lot of businesses. I was working in real estate. I was a real estate salesperson. I worked in real estate wholesaling. I had an e-commerce business, and I was investing in real estate. So I was doing a lot of different things. But I started to see some success now as an entrepreneur, and I was so excited that I started telling all of my friends, you need to go out and become an entrepreneur, because there's this whole world of opportunity out there where you can earn more money the way that you want. Now, I didn't say that you're going to have more freedom, but I said that you can earn more money, and then you can take this money and invest it and be more aggressive with your investments. And I would pitch this so much that some of my friends got very annoyed by this, but a couple of my friends were really intrigued by this idea. And I actually got a couple of my friends, or one for sure, to quit his job. The other one kind of went part-time on his job, to quit their jobs and start working with me full-time. That way they can work on building their businesses. And that was when I learned the hard way that not everybody is meant to be an entrepreneur. Not everybody has the risk tolerance to be an entrepreneur. Not everybody has the discipline to be an entrepreneur. And not everybody is just built to be an entrepreneur. Period. That's okay. You don't have to be an entrepreneur. And, you know, this whole idea and world of entrepreneurship is so glorified now that, oh, it's so cool to be an entrepreneur. Yeah, so being an entrepreneur is hard. And it's not for everybody. It's not any cooler or better or grander to be an entrepreneur versus being an intrapreneur or being an employee. Okay, it does not matter what you do. If you are an entrepreneur, though, the way that you can build wealth is by working to build your business, build your income, take the money that you're making and invest it back into the business. And then eventually, as the business grows big enough, that's when you can take money out and invest it in things like stocks, real estate, and other places. If you are an employee or you're an intrapreneur working in somebody else's business, the way that you build long-term and real wealth now is you're working to get a paycheck. And now you take as much of this paycheck as possible, and you're going to take this money and you're going to put it into stocks. You're going to put it into real estate. You're going to put it into buying other businesses, because now you are working to build equity, not in your own business, because when you're working in somebody else's business, it's not your company, but you should still work there and treat it like your own company. That way you can continue to get raises. You can continue to make more money. But then you take the money that you're earning from this company that's not yours, and then you're going to build equity, not in that company, unless you're allowed to. Some companies will have that exception where you can build that equity in there. That's something you can consider if your company allows that, but most companies won't. But then you're going to want to work to build equity in other assets, real estate investments, rental properties, or stocks, or other businesses. See, when you're building your own company, now you're working to build equity in your own company. And the way that you can do that now is you're working to scale the brand, you're working to grow the brand, you're working to increase whatever it is that you're doing until now you want to either diversify or you no longer have a real growth potential in that business where now you can take the money and put it somewhere else. And this is where now, again, our economic system is designed to do one thing. It's designed to build an education system that produces employees. Now, why is this so important? Because we live in what's called a capitalist system. And in a capitalist system, there are two ways you can make money. You can make money from your labor, and you can make money from your capital. And guess what? In a capitalist system, which one is going to make you more wealth? Is it from your labor? Is it from your capital? It says it in its name, your capital. But what's interesting is our entire education system is designed to teach you how to make money from your labor. So we are taught to make money from our labor, right? You go to school, and if you do good in school, you're going to be able to go to a good college. If you go to a good college, the whole thinking is you're going to be able to get a good job. If you get a good job, you're going to make a big salary, which means you're making money from your labor. And this is why I keep saying it's not just how much money you make that matters, it's what you do with the money you make. You can make money from your labor, but the question is, what do you do with this money from your labor? Most of us never learn a thing about money when we're in school. I can tell you from experience. I went through high school, I went through college, I went through a year of grad school, and then I went through law school, and never once did I learn a thing about investing, building wealth, cash flow. I had to learn these things on my own. And so we learn how to earn from our labor. But in a capitalist system, the people who are the wealthiest, think of anybody, Mark Zuckerberg, Elon Musk, Donald Trump, it doesn't matter who you think of, and I'm not saying this from a political perspective, think of anybody who has money, Warren Buffett. What do? They own assets. If you want to win in this economic system, in this capitalist system, the way you win is by owning assets. Now, how can you own these assets? This is what the capitalist system is. You have to use your capital to own assets. You can use your labor, your job to make money, use a piece of this money to go out and buy assets, stocks, real estate, businesses, whatever it might be. Or you can create that asset. That's being an entrepreneur. You can go out and build an asset. You can go out and create something that does not exist right now. And this is where the real wealth is built. If you really want to make money, that is what you have to put your focus on. If you are not an entrepreneur, that means you got to take your focus right now on not spending all your money, working to earn more money, and taking the difference between what you earn and what you spend and putting this money to work. Putting this money to work in the stock market, putting this money to work in rental properties, putting this money to work to buy businesses, putting this money to work by investing in startups, by investing in other businesses. That way now you have equity in these assets. That way now your money is working to earn you more money. Because when you go to work, you are working to earn money. But there's a limit to how much you can work. There's a limit to how much you can get paid. There's a limit to how many hours a day you can work. But there's no limit to how much your money can work. And this is where now it's, how do you scale what you can do? And there's a lot of similarities now between being an investor and being an entrepreneur, because I knew I wanted to be an entrepreneur from an early-ish age, even though I wasn't allowed to do that. But I knew that I had this entrepreneurial bug. But what's interesting to me is as I went through my entrepreneurial journey, I went through a lot of different things. The first thing that I did was I was essentially a glorified party promoter. I was an event planner and doing parties and whatever. But what I learned was I didn't actually build a business, because the way it worked is I would go out and host a party. I was in college hosting college parties. I would go out and host a party and I would get paid. And I was making good money for a college kid. But I had essentially just created a job for myself, because the way it worked is I would have to go out and host a party. I'd have to plan it, be at the event, make sure that everything runs smoothly, and then I would get paid whatever money that we made. So I was creating my own income, but I really just created myself my own job, because if I wasn't working, I wasn't getting paid. And at the time, it was great because I was starting to finally make some money for myself. But then as I thought about what is a business, and I thought about the bigger businesses, I started reading more books. I realized that the biggest businesses and the bigger businesses out there, they create the ability for a person to pull themselves out of. That's real equity. Because if you think about what is equity, think about your home. If you own a home, if you bought a home for $500,000 and you built equity in this home, you paid off, let's just say $200,000. The home was worth $500,000. You paid off $200,000. So now you have $300,000 of debt, $200,000 worth of equity. What does the equity mean? The equity means you can do one of two things. Either you can do a cash out refinance, pull some of that $200,000 of equity in the home out through a loan, or you can sell the home for $500,000 and then get the $200,000 of equity in your pocket. That's real equity. When I was doing my event planning company, I didn't have any equity. I created a job for myself, but I had no equity in my labor. Because now if I wanted to sell that business, nobody was going to buy it. And I had no way to buy it because it relied on me to do something. And that's when I started thinking a little bit differently of how can I build something more scalable? How can I build something that's a little bit more of a real business as opposed to just me creating my own job? And that's a big difference between a solopreneur and a real entrepreneur, somebody who's building a real business that doesn't require them necessarily to be there for the business to continue living. And that's not saying you shouldn't work in your own business, but if you want to build a real business, there has to be an element of replaceability to you as well. Because if the business can't run without you, it's not a real business. And it's the same thing now if you're working a job. If you're working a job, you're replaceable. If you died, or if you could not go into work tomorrow, the company is going to find a replacement for you in the next 4 weeks. And maybe you're really good at your company. Maybe you're really good and they don't want to let you go. That's good. That doesn't make you irreplaceable, because if you couldn't go into work tomorrow, they're going to have to find somebody to replace you. They might not be as good as you, but your equity in that company isn't going to keep paying your family if you stopped working there. Because you might build great rapport with the company. You might be very valuable to the company. There's nothing wrong with that. That's a good thing. But I'm talking about for your own personal finances. If you can't go into work anymore, your company's not going to keep paying you. Maybe you have a pension, but most companies don't offer pensions anymore. And so now where's your equity? And this is where now you are building your skill set when you work at your company and you work up in the company. When you build your skill set and your knowledge and your ability to provide value, you can earn more for every dollar, for every hour that you provide. You earn more dollars for every hour that you provide. But if you stop going into work tomorrow, your paycheck's also going to stop. So again, where's that equity? What does equity mean? Equity means you can continue to keep getting paid without you having to continue going into work. And this is why the equity in your home is one of the worst kinds of equity, because that equity is essentially dead equity. It doesn't do anything unless you sell it. And so this is where, well, what are the alternatives? When you take your money and you go and put it into a stock, if you go put your money into the stock market, now you're building equity in this company, in this business that you're investing in on the stock market. If you were to invest in the Amazon Corporation, I'm not telling you what to invest in, just an example. If you were to invest in the Amazon Corporation, now Amazon has a CEO that's working to drive up the profitability of Amazon. They're working to drive up the stock price of Amazon. And there are thousands of employees at Amazon that are working to make the Amazon company grow, to make more money, to produce the value that Amazon provides. When you buy one share of Amazon, you become one of the owners of Amazon. Just like that, when you go out and you invest in rental properties and you're building that equity in rental properties, now you're buying this land and this building, which is producing you cash flow. You have equity in this building that's producing you cash flow. Why? Because now there could be people living there. It could be an office that's using your building. It could be a restaurant that's operating at your building. It could be whatever type of building. Now, somebody is going to live in or use your property, and in exchange for them using your asset, your equity that you work to buy, you're going to get paid with cash flow. And if you do it correctly, the cash flow that you're getting, the rent that you're getting, should cover all your property expenses and put some money in your pocket every single month. So now compare these equities. You can't go to work tomorrow because you got into a car accident. The company decides they're not going to keep paying you. What do? Well, if you have that sort of equity, you can keep getting paid. You can keep having your assets working to produce an income. If it's a rental property, they can pay you with cash flow. If it's dividend paying stocks, they can still pay you dividends. Now you might be thinking, but Jaspreet, it's going to take a lot of money and a lot of time for me to go out and actually own enough assets to produce a significant amount of cash flow. And you're right. It does take time. This is why I said, again, in the beginning of this video, it takes money to grow your money, but it doesn't take money to make money. If you want to make money, you need the hustle, you need the drive, you need the work ethic, and you need the ability to take risks, and you need the ability to learn. If you can do those things, you can go out and earn money. But if you want to grow your money, now you need more money. And this is what your equity is doing. When you're trying to create or buy this equity, now you're working to grow your money. And this is where the real wealth is built. It's about buying more stocks, buying more real estate, investing in other businesses, investing in other things that are paying you. Now, there's different ways that you can get paid. You can get paid with cash flow, or you can buy investments that go up in value, or that you're buying for the purposes of going up in value. I like cash flow. That's just the way that I am. I like buying an asset and knowing that I'm going to get paid month after month after month, or quarter after quarter after quarter, because now what I'm doing is I'm just working to stack the cash flow. I'm just trying to buy more of these cash flow producing assets that way every month I'm getting paid more cash flow, more cash flow, more cash flow, because that's the way my mind works. Other people don't like that because the cash flow gets taxed. If a company is paying you with dividends, that means the company is sucking money out of their bank account, and instead of trying to grow the company bigger and faster, they're paying their shareholders. So some people don't like that. Other people say, you know what, I like a company when they take the cash and they reinvest it back into the company. That way they can't pay me a dividend, but that's going to make the company grow bigger. It's going to make the company grow faster, so the stock price grows faster. Some people like that. Plus, if you're not getting paid with cash flow, you don't got to worry about paying taxes, because when you get rental income or when you get dividend income, that's taxable income. Now, of course, as an attorney who's not your attorney, I can tell you that our tax code does provide benefits to investors. When you make money from your rental properties, when you make money from your stock dividends, there are tax breaks that you can get that are not available to people who are earning money from their jobs. If you're just earning money from your job, you're going to be subject to the highest tax rates and the least amount of tax deductions. When you're earning money from your investments or your business, now you have the potential to earn lower tax rates and higher deductions. That's the way that our tax code works. So when you're earning money from your job, you're not subject to those write-offs. You're not subject to the lower tax rates. But with your investments, you do get those things. And this is where, again now, understanding the system. Our system is designed to benefit people who understand the capitalist system. That means our system, whether it's the tax code, how much money you earn, how much assets you earn, how much freedom you have, our system is designed to benefit people who understand the capitalist system. Our system is designed to benefit people who understand how to invest and how to build businesses, period. Not everybody can be an entrepreneur. Not everybody should be an entrepreneur. But every single person in America should be a business owner. Don't go out and build a business if you're not an entrepreneur, but you can go out and invest in businesses if you're not an entrepreneur. Both of them will allow you to win in this economic system. You don't have to go out and build a business, but you can invest in other businesses. Everybody can do that, and you can start doing that with as little as $100, even $10, even $1. There's a lot of apps out there that will allow you to start investing with as little as $1. There's no financial barriers now because of technology that stop people from doing this. The barrier that's stopping people is the education. And the risk now, because of technology, I love the fact that there's so many apps and technologies out there that have made investing so much more accessible. But the risk and the downfall to this now is you have a lot of people that are getting on places like Robinhood and these other trading platforms because you hear about the powers of investing. That's the good part. Now, the bad part is these platforms make money when you make more trades, and they make money when you borrow money. And when you're just starting off as an investor, you might not know how to invest your money the right way. In fact, you probably don't, and you probably will lose money. Everybody loses money. Losing money is a part of investing. The goal is to make way more than you lose, but everybody will lose money from time to time. And this is where now the risk is when you have a lot of people starting to get into investing with the ease of accessibility thanks to technology, with the lack of financial education, and then you open up all these financial tools like margin trading, meaning trading on debt, and quick trading, and all that stuff to allow you to make a lot of fast movements with their money. What that does is it allows people to make much bigger bets than they're comfortable losing and make much faster trades than they probably should. And this might be okay when things are good and the economy is booming, because now, hey, when the economy is growing and you're trading on margin, you can make 5x what you were planning on making before. And that can feel great when the money is going up. But when you're in the red, especially when the economy is slowing and people are worried about recessions, people are worried about the market going down, now not only can you lose all of your money, but now you can also lose the brokerage's money, which means now they're going to be coming after you for the debt that you spent plus interest. And that's where the risk is. And this is where financial education is so important, to understand the difference between being a real investor and chasing the shiny objects. And when times are good, when the economy is booming, everybody starts chasing the fancy and shiny objects because you see all that money. You see people talking about how much money they made day trading, how much money they made trading these hot meme stocks, how much money they made trying to trade these other whatever things. And it's following that, oh, I want to get rich fast too, because nobody wants to get rich slowly. That is not a very attractive selling method for anything. If you ask anybody, do you want to get rich fast or slow? 100 out of 100 people are going to say, yeah, I'd rather get rich fast. The downfall to now that is a lot of people then fall into the bad attractions and the bad things that will cause you to lose way more money than you can ever make. And this is where that financial education becomes so crucial, so crucial, so crucial. I don't think I can say this enough. Your financial education is so crucial to ever building any sort of wealth, because I get into huge debates over this with a lot of people, even in my YouTube comment section. If you want to pull people out of poverty, the best way to do that, and it's not just poverty, if you want to pull people out of any place to the other, it always starts with education. Because you can give a lot of money to people, but if you don't know what to do with that money, in 6 months or in 6 years, the vast majority of people are going to end up right back where they were before. It's the same reason why statistically, the majority of lottery winners will end up broke or bankrupt within 5 years of them winning the lottery. Why? Because if you don't know what to do with the money, if you don't know what to do with this thing, with the resources, you're going to end up back where you were before. That's why it has to be a lifestyle change. If you want to become wealthy, it is a lifestyle change where you have to now understand what does it take to actually get there. And that starts with the education. Now, don't get me wrong. There are people that need resources, that you need access to some tools. I was reading Trevor Noah's book recently, Born a Crime. Man, great book. Absolutely great book. I've been finding some really good books recently, but this book was so inspiring and so educational in so many different ways. I highly recommend this book. And one of the things that he talks about is that saying, teach a man to fish, you feed him for a lifetime. Give a man a fish, you feed him for a day. And one of the things that he says is, yes, that's true. But one of the things that you're missing is you got to have a fishing rod to be able to fish and feed yourself for a lifetime. And this is where, we need the education. If you want to be able to give somebody the tools to go out and become successful, the first thing you need is the financial education. Then you got to get access to the tools. But the problem is most people don't even know what tools they need because they never have that basic level of financial education. Now, again, this goes back to why I'm so happy that we have platforms like YouTube out there, because the barrier to get this financial education is so low now. Most people have access to a computer or a phone or Wi-Fi. Most people have access to podcasts and YouTube because it's free. You can go out and start learning. So now when we talk about how do I increase my income, how do I make more money, Start watching YouTube videos. Learn how to make more money. Learn about different business ideas. Learn about different ways that you can get a career change. Learn about ways that you can get a different certificate. Learn about ways that you can do something to earn more money. And then as you earn more money, this is where it's what do you do with this money? Whether it's your own business or you're working for somebody else, you have to do something with the money that you're making now. If it's your own business, now if you want to take the risky route and see the bigger returns, take the money and put it back into the business. That way now you're working to build the value of your equity in the business. That way you can build a larger, more scalable, more powerful business. If it's not your own business and you cannot get equity in your company or you don't want to get equity in your company, then the alternative is you take that money that you're making and you put it into other passive assets. So now you're working to get a paycheck, and now you're going to understand this capitalist system. That way you can benefit from this system because now you want to own the assets. You're going to buy stocks. You're going to buy real estate rental properties. You're going to buy other businesses. You're going to invest in startups. You're going to go out and be a business owner without operating the business yourself. And that is where the real wealth is built, because now you understand the difference between just earning money from your labor and earning money from your capital. And this is not something that's going to happen in 6 months, 12 months, maybe even 6 years. But if you go through that decade of sacrifice where you say, you know what, Jaspreet, I'm going to commit to changing my lifestyle because I want to be free. I want to build wealth. I want to be able to take care of my family. I want to be able to take care of my wife. I want to be able to take care of my husband. I want to take better care of my kids. I want to take better care of my parents. I want to give back to my community. I want to do more things. Because the reality is, look, money talks. And if you don't have money, you're going to be subservient to the people who have money. It's so frustrating because we live in a society that runs on money, but so many of us are scared to talk about money. And the reality is, if you don't have money, you end up becoming subservient to people who have money. This is why we need more good people with money, and it's why you need to go out and get your money. And the reason why this is so hard is because we have a whole bunch of people who have no problem running their mouths. You see it all over the internet. People love running their mouths. I'm going to screw up this tweet or Instagram post I was seeing the other day. But we live in this society, especially with the internet, where one of the most attractive and viral trends right now is to show how good you are by bringing other people down. And it is one of those things where it is so easy to bring somebody else down. And it makes you feel so good inside to hate on somebody else. And this is the society. People love doing this. This is easy. But guess what? This doesn't pay the bills. Hating on somebody else isn't going to pay your bills. Hating on somebody else isn't going to buy your wife the vacation she wants. Going like this is not going to pay for your kids' college. So if you want to really become successful, let people talk. And you keep taking your money. Go getting your money, because the reality is it costs money to eat. It costs money to feed other people. If you want to take care of yourself, you want to take better care of your family, you want to take better care of your community, you can do that. But most of the things that it will take for you to do that is money. Not all of it. If you want to be a better parent, it's not just having more money. It's being there for your kid. If you want to be able to help your community, it's not just throwing money there. It's being there for the community. But having money helps. And this is where you have to understand what's important to you. And if you want to go out and attract more money, the thing that holds so many people back is, what will other people think? Because you're going to have to do something different. You're going to have to do something weird. That might start on the low end of, I got to sell my BMW and start driving a Toyota Corolla. What are all of my friends going to think? Maybe that means you don't go to the club anymore. Maybe that means you stop going to Benihana's every Friday night. Maybe that means you don't get to go to Cancun with your family or your friends this year. Maybe that means that you cannot go to the football games or party every Saturday night. Now, you're making some sacrifices. People start to look at you like you're weird. But the reason why you're doing this isn't because you're broke. It's because now you're putting money aside that way you can build more wealth. And what's interesting is, in order to become wealthy, a lot of times you have to look broke in order to do that. And when I say look broke, that means you got to make financial sacrifices in order to get there. And many times, ironically, the people that look the richest, they have the nicest car, they have the best clothes, they're going out a lot, and they have all these fancy things, they're the ones that are actually struggling the most financially because they're working so hard to keep up with this look. That's why I keep saying this is a lifestyle change, where if you really want to become wealthy, you're going to have to change the way you live your lifestyle. Now, I'm not saying live broke or look broke forever. I want you to have the nice car. You want to drive a Beamer? Fine. You want to drive a Benz? Great. You want to have a Rolls Royce? Even better. I just want you to be able to afford it first, because the mistake that so many people make is they start making money, and the first thing they do is they go out and they start buying the nice stuff. You go out, you make money, you're working hard to make money, you're working hard at a job, maybe you even hate the job, so you're working hard at a place that you hate in order to go out and make BMW rich, because now you're financing a car or you're leasing a car that you can't afford, as opposed to now I'm working hard not so I can make my car company rich. You go out and you buy a Toyota Corolla, Toyota Camry with cash. You don't got to worry about the monthly payments, but now you have some money every month left over because you don't got to pay for the premium gas. And now you take the money and you invest it. That way now you can work to make yourself rich first. It's a completely different game, but it requires you to rewire the way that your brain works. And this is so difficult because most of us grew up in generational poverty. Even if you had money, even if you have nice homes and nice cars and a nice lifestyle and nice things growing up, you might still have the generational poverty mindset because you saw your parents always arguing about money. You saw your parents always saying, we don't have enough money. We can't afford this. I can't afford that. I can't have these types of things. And you keep seeing your parents go through this lifestyle where you're just making money to spend it. You're making money to spend it. Living on credit cards is completely normal. Spending money you don't have is normal. Even if you have the nice things, you have a good job, you have a good income, that mindset of brokenness gets carried on because that's all you see. And if you never are taught basic financial education, you're not going to know anything else. Like now we're starting to learn a little bit about nutrition. Not a lot, but a little bit. So if you grow up and you see your parents always eating McDonald's, talking about how French fries are the best food on planet Earth, eating hot Cheetos every single day, you might grow up doing the same thing. But if you learn about health, you learn about nutrition, because some schools are starting to talk about these things, and you say, you know what? Maybe instead of hot Cheetos, I'm going to eat broccoli. And now you have broken the cycle. And forget where I saw this, but there was a person who was talking on Instagram. He was a medical researcher talking about how many of the genetic diseases out there, they say obesity is genetic, are not actually genetic in our DNA, but rather many times, not every time, but many times, it's mentally genetic because you see your parents constantly eating a certain way, so you grew up eating a certain way. So if your parents are always eating unhealthy, fried foods, unhealthy foods, and they feed you that for the first 18 years of your life, that's what's normal to you. Not because you have something in your DNA that says you have to be obese and you have to have high blood pressure and you have to be unhealthy, but because that's all you're taught. And so then when you go out and you enter the adult world, that's all you eat. That's what you know. That's what's comfortable to you. It's that in your brain genetic that this is how it needs to be. Unless you go out and break it. That means you have to start with the education that you have to learn that something that you're doing is not right. And it's the same thing with money. Except there's so little knowledge about money, and there's so little awareness about money, and there's so little ability to talk about money. Because at least like with health, it's not a very taboo topic to say, you should be healthy. I mean, I guess it's becoming more and more taboo nowadays in this culture, but generally, it's not a taboo thing to say you should be healthy, and I think we should all agree it is good to be healthy. But when it comes to money, could you imagine someone going out and saying, you should be rich? People will look at you like you lost your mind, that you were evil, that you're greedy, that you're the scammy salesperson. But the reality is, yes, you should be healthy. You should also be rich because, well, it's more money that will allow you to live your life the way that you want. Because interestingly, with the word rich, many people associate scams, shady, illegal, doing bad things, criminal, horrible person, all these things with the term rich. When in reality, what does it mean? It means having money. Money is just paper. It's just an object that allows you to buy things. Money does not make you a good person. Money does not make you a bad person. In fact, it really just amplifies who you are. If you give a good person more money, they have a tool to do more good. If you give more money to a bad person, they have a tool to do more bad. That's why we need more good people with money. See, money is just a tool. It's an amplifier. Think of it like fuel. Here's fire. If you put fuel on fire, what does it do? It makes the fire bigger. It amplifies who you are. The best example I can give of this, because I'm a food person. I love food. I got into health and all this stuff, but I do like my food. And during the weekdays, I try to eat healthy. On the weekends, when I'm with my friends, I'll eat a little bit more unhealthy, but I exercise and I try to be healthier in my life. But when it comes to food, I can give you the same analogies when it comes to money. See, money is like the icing on our life. Our cake, the actual cake itself, that's our life. Now, if you have a whole bunch of money, you take all this icing and you slather it on top of a nasty cake, you have a bad life, more money is not going to make the cake a good cake. Yeah, you might have good icing, but good icing on a crappy cake is still a crappy cake. If you want to live a healthy and fulfilled and good life, you need a good cake and you need good icing on top. That's how money works in our life. And most of us are so scared to talk about this, partially because, one, we've been bred that money is taboo and evil and you shouldn't talk about it, and anybody who has money is evil. And then secondly, because many of us are insecure about our own money. And because of that, we put smoke screens around it and we never want to talk about it. And we say money's bad, money's taboo, money's evil. Don't talk to me about money. Don't worry about money. Don't stress about money. And yet most people then have to go to work every single day doing something that they hate just to make the payments. And this is why it's called a rat race. You're constantly spinning your wheels. You're constantly working to get the next paycheck. That way you can pay last week's bills. But it doesn't have to be that way. But in order to break that system, it's not going out and finding the next get-rich-quick system. It's not by hating people who have money. It's by now learning. First, you learn, how did the people who have money get it? What are the different ways that I can earn money? And you try things. And most of the things you try are probably not going to work. And it's almost like this game of pinball, where you're going to try one thing, shoot over here, realize this doesn't work, shoot over here, realize this doesn't work, it goes over here, realize this might not work, go over here. Now you start learning things and you start applying it here, and you say, oh, let me try this and then that. It takes that trial and error. And now this is a whole different skill now of how do you build a business, how do you pivot, how do you find the right investments, how do you grow, but you cannot run before you crawl. You got to just get started. And it starts with that financial education. And it starts with you learning, what is money? How does money work? How does our economic system work? How can I attract money? How can I use my money better? How do I save my money? How do I invest my money? What are investments? What are different ways that I can earn my money? What are taxes? How do taxes work? And unfortunately, it's really unfortunate that all these topics are now becoming more and more politicized. And this is going to continue to stay that way. But your goal is not to get very angry and emotional and political about money, but rather just understand money is green. That's it. And you want to go out and get your fair share of the money. There's a lot of money in the world. You don't have to go out and create the money. The Federal Reserve Bank is already working to do that. They have created trillions and trillions and trillions of dollars. That money is already in existence. It exists. And there are people that earn a lot of money in the world. So you can too. And a lot of money is relative. To some people, $100,000 a year is a lot of money. To some people, $1 million a year is a lot of money. To some people, $10 million a year is a lot of money. To some people, $100 million a year is a lot of money. And yes, there are people that make $100 million a year. You can do the math to see how much money that is a month or a day or even an hour. It is possible. Now, I'm not saying everybody's going to go out and become a multi-millionaire. Most people don't need that level of money or care to get that level of money. But what you need to understand is that there's a lot of money in the world. It's already existing out there. All you need to do is grab a little piece of that pie. That way you can have some of the money for yourself. But in order for you to go out and get that piece of the pie, it 99.99% of the time isn't just going to fall into your lap. Are there some people that end up winning the lottery, they win the genetic lottery, or they win some sort of lottery, that way the money falls in the lap? Sure, but it's probably not going to happen for you, okay? But that doesn't mean it's not possible. So ignore the people that got lucky. Ignore the people that had their parents or their grandparents or their rich uncle just give them the money, because that's not most people. What you need to do now is understand most people who become successful have to go out and create it themselves. So how do you do that? How do you earn more money? And how do you put that money to work? Again, if you are an entrepreneur, you put that money to work by putting it back into the business. If you want to diversify away from your own business, then you can go out and buy other passive investments. If you're not an entrepreneur, okay, how do you work to earn more money? Now, when you earn money, what do you do with this money? Which passive assets can you put this towards? Stocks, real estate, rental properties, other businesses, other startups, whatever it might be. What assets can you put this money towards? That way now you can work to build your own wealth. If you want to be a high earner or a high achiever, it starts with your mindset. And what I want to do now is go over 10 mindset shifts that you can start making today that all high achievers are doing. And number one is the blue ocean mindset shift. There's a book out there that I highly recommend you read called The Blue Ocean Strategy. And what the Blue Ocean Strategy talks about, this is mainly in terms of entrepreneurship, but you don't have to apply this to entrepreneurship. You can do this even if you work a job. But what the Blue Ocean Strategy is, it says that the majority of businesses out there are operating in what's called a red ocean. It's a bloody ocean where businesses are competing against each other to do the exact same thing. People are just trying to make a little bit of a better mousetrap where you're selling the same product that somebody else does or a copy of somebody else's product. Maybe you try to compete on price. Maybe you try to compete on speed, but you're competing on little things where essentially you have the same business as somebody else. You're direct competitors and you're trying to undercut the other competitor. So you have this limited market share, this market space. And now the companies there are working head to head for the exact same market share, the exact same market space. And it's a bloody competition to essentially the bottom. And what the blue ocean strategy is, it's how can you go from this bloody red ocean to a blue ocean where you have a wide range of opportunities and little to no competition. This is what the blue ocean strategy is. An example of this blue ocean strategy at work would be comparing the old Blockbuster and Family Video, where you had all these movie stores that were competing against one another for your Friday night movie rentals. And then came along Netflix, another DVD rental business. But instead of having a place where you would go to rent a DVD like every other DVD rental business out there, they started off by mailing you the DVDs, and then they started investing in their own technologies to create a movie streaming model. A completely different business model than all the traditional movie rental businesses out there. They created their own market share. They created their own business strategy. They were selling the same thing, movies, but through a whole new market. Because now they created a whole new market of people who wanted to stream or get access to movies on their own terms instead of going to the Blockbuster, instead of going to Family Video. And it was a whole new business model, and they eliminated all their competition. A completely different business model of doing something different. So now, if you want to be a high achiever, the question is not how do you go out and build the next Netflix, but how can you play a game that isn't competing against everybody else, doing what everybody else is doing? Because if you do what everybody else does, you're fighting for a small pie. But if you can start innovating and hustling a little bit smarter, now the question is, how can you create your own success doing something a little bit different? So if you have your own business, the question is, how do you create your own blue ocean? And if you are working to build your own wealth, again, this is the same thing, thinking differently than everybody else. Everybody is working to get a paycheck so they can drive a bigger and fancier car. But if you really want to have the bigger and fancier car without having to worry about the price, you got to create your own income. And if you don't want to go out and create your own business, that means you got to go out and invest in other investments, other assets that will pay you, that way now your assets can pay for your car. The second mindset shift that you have to make is going from a scarcity mindset to an abundance mindset. Most of us, most people have a scarcity mindset where we think there's a limited amount of money in the world There's a limited amount of happiness in the world. And so if somebody else is successful, if somebody else has money, if somebody else is happy, I should hate them because they're taking away the limited amount of success or winnings in the world. When in reality, there's a lot of money in the world. And there's no limit to how much happiness that's in the world. Like, you can be happy and I can be happy. But the problem is when somebody's unhappy, it's very happy to be happy for other people who are happy. Just like that, when somebody's broke, it's very hard for a broke person to be happy for somebody who did get that money. But this is where, again, it starts with that mindset. There's no limit. There's no scarcity of money. There's a lot of money in the world. Yeah, do some people have a lot of that money? Sure. But there's no limit to you getting a piece of that money too. What you have to do is figure out how can you create some value that we can get a small little piece of the money that's in the world. And just like that, happiness is in abundance as well. Now, this is not a mental health channel or topic, but if you're struggling emotionally, you're struggling with anxiety, depression, you're struggling to feel happy, it's not a money thing. More money is not going to make you more happy. More money gives you access to do things that will make you happier. But if you're not happy, you got to go figure out what it is that's making you unhappy. And if you have something deep down, you have issues, mental issues, go get that taken care of. Talk to a therapist, talk to a psychiatrist, talk to a psychologist, do whatever it takes to take care of that, because one of the most painful things that I've seen people realize is that more money is not the solution to make you happier. And when you chase money to chase happiness, and then you get that money, but you don't get the happiness, you get an even deeper and darker hole inside of you. And that's where you got to understand that if you want to be happy, that's different than getting money. More money can allow you to do more things that make you happier, but it's not just going to make you happy all by itself. Number 3 is the work to learn, not the work to earn mindset. And this is a big mistake that so many people make, is that they work to get jobs solely for the purpose of making money, solely for you to go out and buy the nice things. But if you really want to be able to scale yourself, whether it's in your career or in your business, you have to be willing to work to learn, not just to work to earn. That means you have to be willing to go out and maybe get a job where you're not making as much money as you were before, but because you're going to learn a skill, you're going to learn something, you're going to learn a value, a skill that is scalable that you can apply somewhere else. Or maybe you're going to work in a company or in a place where you have more scalability, but it requires you to build the long-term mindset of, now I'm working not just to get a paycheck. And this is so hard because most of us are taught when you go get a job to just look at the paycheck. How much money are you making? What is the salary? But real wealth, if you really want to build wealth, that means you're going to have to work to learn, not just to work to earn. One of our newest hires here at Briefs Media talks about this all the time, because he talks about all the crap that he had to go to in other places because he didn't know anything about digital marketing, digital business, and he would work for these other brands just to learn. He started off, he got roles with big digital brands because he offered to work there for free. He got his foot in the door. Then he got to meet other players in the game, and he offered to work for very cheap. And he had to make a lot of sacrifices to do that. But the reason why he did that wasn't so he could make a lot of money in those positions, but so he could learn. That way he could then go to the next person, to the next brand, and show, hey, this is what I've done. I've done X, Y, and Z. I've learned these things. I've learned digital marketing. I learned how to work with people. I learned how to advertise. I learned how to sell things. I learned how to work with brands. And now because I've done all of this, I built up this huge resume of skills and experience. Now he has the ability to earn way more money because he was willing to work to learn first. 4 is building a long-term mindset. And this one is so difficult because when you grow up with this idea of instant gratification, it becomes extremely difficult for you to see any real success in life, because now all you want and all you see is the instant success. You see people who became rich overnight and you wonder, why can't you have that too? And then that's what you start doing. You start to follow the get rich quick schemes and systems. Now maybe you throw your money into a meme stock, think you're going to get rich, and then as soon as you buy, that's the stock that goes down. You find a cryptocurrency that's on the way to explode, you buy it, you make a little bit of money for a few weeks, and then it implodes and you lose your money. You find a new course or system that's going to show you how to make 6 figures in 6 months. You buy the class and 2 weeks later, you stop taking it and you realize this is not going to teach you anything valuable. Your money's lost there. It's a game where you constantly keep getting lost in that track when in reality, real wealth is built over the long term, over any sort of whatever you want to call it. I mean, with your investments, investors will beat out the traders over the long term. Traders might win in the short term, but the investors are going to win time and time again over the long term. But that requires you to be investing into an asset for years, if not decades. Building a business is a lot more profitable than starting a quick side hustle that's going to make you a lot of money. But it takes a lot more dedication and sacrifice and risk today to do that. Learning from a class that's going to teach you how to build wealth or invest your money isn't going to be as attractive as 6 figures to 6 months, but you might actually learn a skill like real estate investing or money management or building a business or other skills that will allow you to actually scale your income, but it's not going to be as attractive as everything else. And this is where, unfortunately, getting rich quick is a lot more attractive than getting rich slowly. But getting rich slowly is a lot more of a surefire way to actually get rich. And again, if you want to get rich faster, you got to put in more effort, you got to put in more work, you got to take on more risk and try more things in order to do it. But ultimately, you have to have the long-term mindset of, I'm willing to do whatever it takes, whether it takes 1 month, 10 months, or 10 years to go out and get there, because it's a lifestyle change as opposed to just, I'm going to do this for 6 months and see what happens. Number 5 is you got to adapt the growth mindset. And this one is so hard because many of us, or a lot of people in general, like to count other people's pennies, and they're more worried about what other people are getting rather than what they get themselves. And what you'll see is that people are so focused on what other people are getting that they would rather you not become successful than they become successful themselves. And you see this in so many different industries in so many different ways. I remember when I was in college, I was working as a realtor. I was working with these clients who wanted to buy this home. They were very difficult clients. Showed them home after home after home after home after home. Finally found them this home that they loved, that they liked, that was within all of the specifications. We're ready to make the offer. We're working on the contract. And I don't know how many weeks or months this is into us working. And the husband and wife who wanted to make this offer sit me down and they say, Jaspreet, okay, we want to put this in the contract. There's only one thing. I said, what's that? They said, we want you to put half of your commission into the deal. We want you to give us half of your commission. I said, why? Again, I was in college. I think I was going to make about $12,000 to $15,000 in commission on this one deal. And they said, we don't think that a 20-year-old deserves this much of a commission, so we want you to give us half, essentially. Now, I was a hard head back then. I didn't really negotiate or talk, and I said, nope, you can do it yourself. And I walked away. They were more worried about what I was going to make as a broker, as a realtor in this deal. They knew exactly what my commission structure was. Before we even began working together, they had to sign paperwork which said that I was going to split the commission with whoever the sellers were for the property. The money wasn't coming out of their pocket. It was coming out of the seller. So they knew exactly what was happening, but they waited until the last minute because they felt like I shouldn't be making $12,000 to $15,000 off of that one deal. Well, I walked away and they lost the ability to get that home. And so this is that growth mindset of now understanding I need to focus on me, not what everybody else is, and I can have more. It goes hand in hand with that abundance mindset that I can have more money, I can have more success, I can have more happiness, and me being successful is not going to hinder somebody else from becoming successful. You can become successful, and I can become successful. You can be happy, and I can be happy. You can be healthy, and I can be healthy. There's no limit. And this is that growth mindset of, wow, we can all win, but I have to be able to believe that we can all win. And this is that, it's just a different way of thinking when you start to realize, wow, being a hater doesn't do any good for anybody. It doesn't help them, it doesn't help me. In fact, being a hater might help them and it might hurt me. So me hating on somebody else might give them more fuel to want to succeed, while it just keeps me in this negative, like just toxic environment that I'm swimming in, and I'm creating that toxic environment myself. Number 6 is ignore what other people think. And this is so difficult for so many reasons because I can tell you from the traditional Indian culture, this whole idea of what will other people think. I mean, every immigrant brown kid has heard their mom and their aunt and their grandma and maybe their grandfather and their parents and their dad talk about how, oh, what are other people going to think if you do this? What are other people going to think if you act like this? What are other people going to think if you wear this? This is like one of those things. This is one of those sayings that you just hear again and again and again. In Punjabi, they say, oh, ki kahange, lok ki kahange. That's the way that they say it in Punjabi. And it's one of those things you're so bred to hear that you're always worried about what other people will think. And I heard it so many times that I became so fed up with it that I stopped caring completely. That I was like, you know what? Let me go out and give people a reason to talk about me. You get so fed up with that. And when it comes to money, what other people think, oh my God, people love talking. This is what, again, people, this is what they do. But this is not going to pay your bills. People love talking about you. But it's them talking about you is not going to pay your bills. So if you downgrade from a BMW to a Toyota Corolla, you bet everybody's going to be talking about you. Let them. It's not going to do any different for you. It's not them talking is not going to pay your bills. Them talking is not going to send your kids to college. Them talking is not going to pay for your wife's vacations or whatever she or he wants. You got to stop worrying about what other people think if you want to become successful or happy or really anything in life. Because when you're so worried about what other people think, you become a slave to other people's opinions. And you got to be able to break out of that. Financially, that means when people see you downsize, they're going to make fun of you. But that also might require you to do some things that, people might think you're weird. When I was in high school, I started playing this Indian drum called the dhol. And being an entertainer or working in the entertainment business, in the traditional Indian culture, is like something that low-class people generally have done. And so when I would go and work at these weddings, playing dhol, you would run across traditional-minded people like that wouldn't even want to make eye contact with you because they would consider you such a low-class person, almost like not even a human, because you're just working in the entertainment business. Now, we were having fun. Like, we were high school kids, college kids, working at weddings, having a good time. We were making decent money. But you would find people that were just so stuck on this idea of status and pride that they wouldn't even want to talk to you. There was one event that me and my friends were working at. We were waiting to play the drum. And there was this elder gentleman there who didn't want to come up to us and tell us to start playing. Instead, because we were so low class as the entertainers, the drum players, he had a bag of pennies and nickels. He stuck his hand in the bag and would just start throwing pennies and nickels at our faces, saying, essentially, get started. That way he wouldn't have to speak to us. And so this is where, if you're so focused, if I was so focused that, oh my God, what are people going to think of me if I do this? I would have never done that. If I never played that drum, I would have never gotten to know the DJs. If I never got to know the DJs, I would have never entered the event planning business. If I never ever entered the event planning business, I wouldn't have money to start investing in real estate when I did. If I didn't start investing in real estate, I wouldn't have become a realtor. If I didn't become a realtor, I would have never gotten involved with wholesaling real estate. If I didn't start wholesaling real estate, I would have never gotten involved with the internet and e-commerce because that wanted me to go into that industry. If I'd never gotten involved with the internet and e-commerce, I would have never ended up here on YouTube. So you got to be willing to just do what's right for you. The world loves talking. Go look at any Facebook ad or Instagram ad. What do you see? People hating. Because people hate when other people are trying to do something, trying to succeed, trying to achieve their dreams. Why are people running ads? Because they want to grow their business. People hate it. And it's just the way the world is. So let people talk. They're going to talk. That is what people are professionals at. But the haters are not going to be the ones that are paying your bills. So at least give them a good reason to hate. Number 7, make yourself replaceable. And this is, again, whether you're an entrepreneur or whether you work for a company. If you work for a company, guess what? You are replaceable. No matter how good you are. You could be the most valuable employee at the company. And that's a very good thing. I'm not saying don't make yourself valuable. But what I'm saying is also have that value of replaceability for yourself, because if you were to die or if you couldn't go into work tomorrow, and I know this is very dramatic, but if something happened and you couldn't get into work tomorrow, your company would have an ad out to find a replacement tomorrow, the same day, especially if you're very valuable. Now, again, I'm not saying don't make yourself valuable. You need to work to make yourself valuable. That way you can make the most money, provide the most value, learn the most things, and have the most ability to scale and grow within the company. But everybody's valuable. Even the CEO is replaceable at a company. But when I say make yourself replaceable, what I mean is you got to do something to make sure your family is still taken care of if you can't go into work tomorrow. Because if you don't work, you're not going to keep getting paid. And this is where now owning the assets is so important. Owning the rental properties, owning the stocks, owning whatever it is, your investments, having that wealth cushion. And it's not going to happen tomorrow, but it might happen over the next decade where now you're working to make money. That way you can own these assets. That way, if hopefully nothing happens, but if something were to happen to you, your family is still okay. That's what I mean by making yourself replaceable. Same with your own business. If you are an entrepreneur, you have to make yourself replaceable in a company. If you are not the best CEO for your company, you want to fire yourself and bring on a new CEO. Yeah, you still own the company, and that's the point, is you want to grow the profits. But if you're not cut out for it, bring somebody else on. And if you want to really be able to build a real business that you can sell, you have to make yourself replaceable. That was one of the big mistakes that I made in my early businesses because I had no idea what a business was. I just created a job for myself. And it was cool. I was making money. But if I wasn't working, I wasn't getting paid. And so if you want to make yourself replaceable in a business, that means you have to be able to pluck yourself out at some point. That's how you build a real business. It's the same thing whether you're working a job, whether you're working a business. You have to make yourself replaceable financially. That way, if something were to happen, the finances of your family can continue to survive. Number 8, plan for the worst, prepare for the best. And this is a mindset shift because, well, things will go wrong. It's life. And you want to make sure you can understand that, but also be able to capitalize on that. So what does that mean? Let me give you some real life examples. Recessions happen. They're a part of our economic system. We've seen recessions happen pretty much every decade for the last century. In fact, the longest period in our modern economic history without a recession was between the 2008 crash and the 2020 pandemic. That was the longest period in our modern U.S. history without a recession. So what does that mean? If you plan for the worst, prepare for the best, well, if you prepare, you can capitalize on recessions because recessions create more millionaires than any other time. Market crashes create the opportunities to build huge amounts of wealth in a short period of time because when you have these economic slowdowns, investments, assets go on sale because people are panicking. They never saw it coming. They are blindsided by this recession that nobody knew was going to happen ever. And people start panic selling and you see good investments drop down. And sometimes you can buy these investments for pennies on the dollar. And if you're prepared, well, now you can be the one that comes in and buy these investments for a huge discount. But that requires you to be prepared when times are okay. So prepare for the worst, plan for the best, be ready for good times, but also be ready for bad times as well. Now, one thing is that financial side, but that also means the practical side of preparing for the worst. Have insurance. Business insurance if you own a business. Landlord's insurance if you're investing in rental properties. There's a lot of different types of business insurances. Protect yourself. Get health insurance. Get life insurance. Not all life insurance is good. Some I prefer term life insurance, not whole life insurance. Term life insurance, I look at it like a bridge insurance where I don't have the assets to support my family if I were to die tomorrow. And so I want life insurance for 10 years until I can build my wealth, or 20 years, whatever it might be. I prefer that type of term insurance. If nothing happens to you, you don't get anything, but you also save a whole bunch of money on the insurance payments because I'd rather you invest your money, build your assets, and not have to rely on an insurance company to build your wealth. But that's just me. People have different opinions. Make whatever other opinions you want. So yeah, just protect yourself and prepare for the worst. By the way, if you do want to learn more about term life insurance, you can check out my affiliate partner down in the description. And what that means is if you use my link down in the description, I will get compensated. You're not required to use them. Just do your own research. Just wanted to give you that as a resource in case you are looking. Number 9, find the opportunity in the bad. And there are so many different ways to do this. Like the most obvious are when you see a stock market crash, some people lose a lot of their wealth. You see some people lose their retirement funds, people lose their life savings, but that also creates opportunity for you to come in, buy good investments for half off. That's the opportunity in the bad. When the 2020 pandemic hit, people were losing everything when the stock market was crashing. And some people were coming in and buying for pennies on the dollar. When the 2008 crash happened, people lost everything. People lost their homes. But real estate prices were then also selling for huge discounts. When I started investing in real estate, it was after the 2008 crash. It was around 2011 when I started investing in real estate. I'm in Michigan, not currently, but I was in Michigan then. And I was buying real estate for literally 90 to sometimes 92, 93% off. And it was because, well, there was bad things going on, but it also created opportunities. It's the same thing in business. Be able to find the opportunities in the bad. I had, when I was starting Minority Mindset, I'll give you that example. I started off Minority Mindset just with an Instagram page. And the Instagram page grew to around, I think it was about 17,000 followers. I think it was actually 17,400 followers. And we didn't really have any other presence. I was thinking about starting a YouTube channel. I had like a couple videos here and there, but it wasn't anything significant. Some YouTube videos. And my Instagram page got hacked into and essentially deleted. I lost access to my Instagram account. Now, I had spent a lot of time building this Instagram and just talking about the stuff that I talk about, financial education and entrepreneurship and all the things that I wish I would have learned when I was getting started. And when that got hacked and deleted, I realized I needed to have more of my own personal brand, because you could delete my followers, because back then, Instagram, this is like, 2015, 2016, like that time, where Instagram was a very different place, and you would just post other things. Like I was posting images of other things and writing about it. So people didn't really know who I was. And that's when I was like, you know what? I need people to know who I am. That way I can protect my brand even better from things like hackers. So that was a big motivation for me to start making YouTube videos and start talking, right? It was an opportunity which was then created out of that hacking. So it's all about now, how do you find the opportunity in the bad? In fact, the reason why I started Minority Mindset at all was because I got scammed. In a previous company, I was running an e-commerce company. I got scammed when I was running that company, and I was so fed up from dealing with scams and just crap because I didn't have guidance as an entrepreneur. So when I got scammed for that time, which was, now I've been scammed many times after that, or since before that. After I got scammed running my e-commerce company, I was so fed up that I started this thing called Minority Mindset to help other people not get screwed over the way that I was. And that then grew to what it is today. Finding the opportunities. Bad things happen. It's life. But how do you find the opportunity? Even in manure, right? You can grow some of the best fruits with the nastiest manure. So it's finding the right opportunities in the manure. And I don't know why I gave that example, but you get the point. And finally, mindset shift number 10. I don't even know if this is a mindset shift, but more of just a mindset, is grit. Grit is the ability to get punched in the face, to get knocked down, to get screwed over, and continue to get back up and keep going. This is one of those traits that you see every successful person have. And this is going to be whether, again, you're an entrepreneur or not an entrepreneur. You have to have grit. If you're working a job, you need to have grit, because guess what? Even working a job, you got to deal with a whole bunch of crap. You got to deal with the company politics. You got to deal with everybody else's crap. And then when you're working to build your wealth, you got to take the money and you got to invest it. And that means you got to deal with the crap of investing. That means you're going to have to deal with the down market cycles. You got to deal with the bad investments that you got to make. That means you might have to deal with bad tenants. You have to deal with all the crap that comes with putting your money to work. Losing money is a part of the process. The goal is to make way more than you lose, but every investor loses at some point. But you have to have the grit to not start crying and complaining and just give up when that happens. It's getting back up, doing it again, learning, doing it again, learning, doing it again, learning. When it comes to building a business, it's the same thing. Building a business is hard. And every challenge, every step of the way, you got different challenges. Making your first $10,000, that's hard. And that's a completely different challenge and skill set from going from 10,000 to 100,000. And you might think, oh man, when you make 6 figures a year, it all gets better. No, go from $1 million or 100,000 to $1 million. Now you got a whole new set of problems and challenges. Go from $1 million to 2 million to 5 million, and a whole new set of challenges. But you got to have the grit to keep getting up, even when things suck, even when it feels like the whole world is against you, even when it feels like everybody hates you, even when it feels like everybody's talking crap about you, even when it feels like nothing is going right, to keep getting back up, putting in the reps, putting in the work, doing what it takes, because that's what you want to do to get to your goals. That's what grit is. And that's, unfortunately, I don't think it's a mindset. This is really a lifestyle. But if you want to build that level of wealth, you got to be willing to put in that level of grit. If you can invest $500 a month and you do this for 40 years, the amount of wealth that you're going to build is going to depend on the velocity of your money, meaning what type of rate of return that you get. Whether you get a 5% return annually, a 7%, or a 10%. Now, this doesn't mean that you're going to get this return every single year. I'm talking about the average. So some years you might lose money, some years you